Welcome to SMF Street. Opening bell right now, we're about 60 minutes into the opening bell. And during our pre-market update, we talked about selling short equities on the highs in pre-market prints. That's not the opening bell print. This is the opening bell print, but it's still the short. But you could have shorted Amazon a couple dollars above that between 8 and 9:30 Eastern Time and 5 o'clock to 6:30 to the opening bell on the Pacific Time that we're on. So basically what we want you guys to know, once again, to the MMTs that you're here getting that price action getting made once again. Look at that short that we talked about on the downside. David witnessed it, so did Phil, and so did everyone here in the MMTs. And the thing about it is, once again, you can see that beautiful diamond action barrel bar price action right there making its way up right in its system. This is the SMF MMT platform. And it was already priced at the public print and the market maker print, and where momentum is made in price and or weakness. And it's all done right here. They really enjoy it. It's all done right here in this info panel here that they have. Let's see how many teeny movement we have on Amazon today. Looks like we got a total round trip ticket of the high was the open. There's the low. That's your short spread right here. So if you're short up here and you come down, let's say you covered at 158.50 even, you know, let's say you made a $1.60 or a $1.70 right here pre-market. You could have shorted above that print in pre-market this morning. And understanding how to get short and how to have pricing controls. We're back here to the breakout. What the MMTs are going to do now, people that sold and protected profits at half of the bar could buy again when you take that bar out. Half of that bar, you took that out. Now you're up here at that top of that breakout. That intraday range is going to have to go north of 75. Otherwise, you're not going to go up there and see that teeny. And then that's how you break through those price action teenies right on up. Nice short move down. Puts in the bottom right here at that teeny breakout action. And then on the upside, it also breaks above those half bars right here. And each one of these lines are a teeny in our pricing system. And we have, our MMTs have their own coding. So basically a teeny means that in dollar movement, means current trend ratio, which is tied to the price, what's here in the black box. This is the most important thing, one of them, because if you're long and this is going down in value, you need to stop out, period. Because that is tied to this right here. Everything that's in here. So basically, price action is price action. Here we go. We got a 159.70 by 73. We have to hold that half bar. The problem that we're having is that half of this bar has been violated. They're sliding that bar. This one here is a stop bar at half the bar in the panel. Let's take a look at where that half bar is. That half bar is right here at 159.59. So 159.59. And we're right there in that bid and ask, 159.59. We're very close. We cannot go below price print of 159.59 MMTs. If we see how we're going below 75 over here on the IR, that's why we're losing price. But we can see if we're going to get made here at 59 cents. If we're made here at 59 pennies and we're ticking above it, then that means momentum and price action is getting built in. If we come back down and we kind of slide the bid, there it is. But we got to hold above it on a closing bar. Stopped out, bars below it, trades over, protected entry, top of the exit. Right there, we slid the bid in the IR. There it is, 62. That's why we teeny down that bar. MMTs, here we are, 69 pennies. We're 10 pennies above that 59 penny and that's half of this bar right here, MMTs. That's the price action. As long as we stay above that 59 pennies, we can go ahead and see if we can break higher, break that teeny action higher. But we got to get back north of 75 right here. And if we can hold at the higher level here, that means that price action is going to hold firm. But if it goes down in value, it goes down to half of the bar again. This bar did not close below half. But all MMTs, to protect their entries and their exits, are always taught to come out at the high of the bars. Because that way, they got their MMT profits, and they're happy, and everyone is happy at that point. The second thing they can do is come back in and buy 59 pennies at half the bar. Because if 59 pennies holds, we're ticking above that 59 penny. That's the only thing the MMT cares about is that price action. And this going high above 70, north to 75, where you can get some stability right there at that. Now he's sliding that bid. See, right there. He's sliding the bid down to 59 pennies, right there at that action bar. We're at 60 pennies. He's going neck to neck with that half of that SMF print bar. Oh, he slid the bid below it. He's 54, 55 pennies. See, that's why you take the stop. The move is weak. You drop below 70 here. You're at 66. That's why that went down in value. MMT, you got to get above that 59 penny mark, which is half of this bar. It's struggling, and if it slides it becomes a short all the way down. MMTs, MMTs. That's what you would do, because that means, but you got to break below 60 over here, just like you can't hold 75 or 70. It tells you right there what that was. So basically 63 by 69, you're above that 59 penny mark. MMTs still holding half of that bar. See the level 2, 65 by 69, you're printing smooth. That's why this is a market maker platform. It is not a public platform. You can't go buy this anywhere, and we don't sell it to the public. It only belongs to the MMTs that are trading with the SMF firm. Okay, we got Rick in a short on the previous bar in the panel here. He's at what price level? Right down here at 64 pennies. Okay, and the thing about it is, in order for this to go lower, it has to break down in the intraday range. The number can't go higher when you're shorter. This number has to go down when you're short. So basically, he's not far off. That's excellent entry within the bar range. And so therefore, we need to weaken in that number, and we'll start to go lower here again. And the stop market should be that you can't close above half of this bar right here. Let's put it in there. Half of that bar. Wow. Half of this bar. Whoops, I'm sorry. All right, that's the time to let it rip. Start getting that long. Oh, I got a breakout happening. Look at that. Breakout on human genome. And Ken Flagg. He's in that human genome. It's time to get net long stocks, folks. Here you go. You're going to put in that price action. Do not be short when you're going higher here. You know, half teeny stop. Half teeny stop. Okay. Traders out of the short. It was okay. He can look up here, see if it fills up at the top again. So he's out before the bar broke out. So he already covered before that engulfing bar. Excellent. And Rick Goley's part of this trade right here. There's a major breakout bar. Now, when it was failing over here on the top of this reversal pattern, he had gotten a small short. However, he had a 10 penny stop at a certain part within using this bar down here. And when the IR, this right here, intraday range right there, was going higher, he had to have a stop right down here at the bottom before that engulfing bar happened, meaning that he was already stopped out right here prior to that breakout. And this is all very live trade of what MMT Rick was doing there. That 10 penny has taken him out of the way. Now he's going to see if he holds half of this bar. The reason why we went higher, folks, is because during this live part, we never broke on a closing price below 159.26. That's half of the SMF breakout bar in that diamond, and it's right here in that info panel. Do you see it, Phil? Does everybody see my info panel down here? Okay, it's already calculated there. But notice that the SMF closing bars are also calculated. So if that's at 61 pennies, that's nice. And these bars are going higher on half bars. That's when the trend goes up. That's what it will be in your info panel, already pre-priced by the SMF market exchange prices in here. And your bid and ask ratio, when you're taught to learn how to read that, it's right there, here. And the intraday range is still even right there. All right here. And what that means, and moving averages, well, we use mathematical formulas between that, and we'll teach you what that means as far as, because it calculates the weakness or the strength of the trend when these two are done correctly. It's an SMF proprietary price action indicator, price action weak or strong. And Rick Goley learned that keeping that and seeing how you can break higher. But what the beautiful thing was that the public doesn't do is they don't take the stop market. The system here tells you when to do that and when to get back in again. So therefore, within these lines right here, is that these are calculated by our system and our pricing, which is already in here. These are 34 pennies today, each line. And we already made the market down here with market makers. The market makers took it up, bam, breakout, bam, and now we're at a topping area. And basically, how do you tell if it's strong? The longer that you stay higher above 80, and the lower end is 75 in the topping part, that means that price is strong, being built right across that teeny line in the SMF system. And you get bars like that, but you broke below half of this bar. So let's pull this up. Let's pull up. There we go. We're below half of that breakout bar. So right now, that would also warrant a stop on the downside if you close below it. Down here, when you didn't close below it, you got that move higher. But now if we do close below it, that's where the stop market, MMT stop market's going to be again, no matter what. So basically this 3-minute bar, if it closes below it, that's where they're coming out of the trade as well as a stop market.